Taxpayer penalties. Oh boy, oh boy. Now we see here that we've got an earned income credit penalty. As mentioned, it's kind of singled out as a credit that has its own penalties. Now, these penalties here are imposed by the IRS to encourage compliance. Don't we love compliance here? With tax laws and to hold taxpayers accountable for their actions. Here are some of the penalties that you may see as a taxpayer. Hopefully, you never see these because you are a compliant taxpayer, but these do exist. Now, if a taxpayer fraudulently claims the earned income credit, and noticing also that you probably, unless you went out of order, you probably haven't hit the lesson on credits yet. The earned income credit, we'll obviously dive more into that once we see that in our lesson. If you fraudulently claim this credit, there are penalties for fraudulently claiming any other credits or deductions, but specifically this earned income credit, you'll be prohibited from claiming the credit for the next 2 years. Failure to make sufficient estimated income tax payments. This is what we saw earlier, so I'm going to skip this one here, but just want to reiterate it. Have all these here on one slide for you. Failure to file penalties. So taxpayers may be penalized 5% per month. That's pretty hefty, including partial months for the unpaid tax for not filing their tax return by the due date. Failure to pay, a penalty of 0.5%, a lot less there, per month may be applied to taxpayers who do not pay their taxes by the deadline. Negligence penalty with respect to understatement of tax. A 20% penalty may be imposed on the amount of tax understatement due to negligence or disregard of the rules or any regulations. Now we've got negligence penalty for substantial understatement of tax. A 20% penalty may also be imposed for any substantial understatement of tax. It's going to be considered substantial if the understatement exceeds the greater of $5,000 or 10% of the actual tax liability. Just as a little pause here, I know this is a lot of percentages, a lot of dollar amounts. However, that's just kind of the way this all works. We've got a lot of memorization. Different exams are going to require different levels of memorization. For example, the audit exam, a lot less in terms of numbers and percentages to know. But if you memorize all of these, this is it, right? This is it. There's a lot of tricky things on this exam as well. But if you memorize everything, it's kind of like putting tools in your pocket, and you can pull out those tools on exam day and solve the problem. Next, we got penalty for a substantial valuation misstatement. A 20% penalty may be imposed on the understatement of a tax that results from a substantial valuation misstatement, which exceeds $5,000, $10,000 for corporations. When might this apply? Well, if you have an issue in the valuation of your home and then your property tax amount is not accurate, that is what we're talking about when it comes to valuations. Fraud penalties, the most severe penalties are for tax fraud. Fraud is the biggest thing. We'll see that even in our business law, which may include up to a 75% civil penalty and criminal charges. However, this is going to be up to the IRS to prove fraud. The IRS must prove a willful and deliberate attempt to evade taxes in order to impose fraud penalties. Once things get more serious, it's not up to you to defend yourself. It's up to, you have to defend yourself, yeah, but it's up to the IRS to actually prove you did something wrong. Whereas if it's not a big deal, generally you have to prove that you didn't do something wrong. We'll talk about that a lot more in business law. Here we got examples of taxpayer penalties. Nothing too critical, really, just the rules we saw prior, but with numbers and names and all that good stuff. So for the earned income credit penalty, we've got John fraudulently claiming the earned income credit in year 3, received a $3,000 credit. The IRS, discovered the fraud, and John must repay the $3,000. And additionally, he cannot claim that credit for the next 2 years. Next, we got penalty for failure to make sufficient estimated tax payments. So Jane's total tax liability for year 3 is $10,000. She made estimated tax payments totaling $8,000 throughout the year. Now, since her payments are less than 90% of the current year's tax liability, which is $9,000, and less than 100% of the prior year's tax liability, she may face a penalty for the understatement of estimated tax, kind of what we saw earlier as well. We got an example for the failure to file. Now, Mark didn't file his tax return by the due date, and his unpaid tax liability is $5,000. He is going to file his return 2 months late. His penalty is 5% per month, including partial months on the unpaid tax, which is $250 per month for a total penalty of $500. And lastly here, failure to pay. Sarah didn't pay her taxes by the deadline and owes $4,000. She pays her taxes 1 month late. As such, her penalty is going to be 0.5% per month on the unpaid tax, which is $20 for a total penalty of $20. Got a few more examples. Let's run through those on the next slide. First off here, we've got negligence penalty with respect to understatement of tax. Well, Tom understated his tax liability by $2,000 due to negligence or disregard of rules or regulations. The negligence penalty is 20% of the understatement, which is $400. So you understated, you did not pay that up. Negligence for substantial understatement, so this is higher dollar amounts. So Lisa's actual tax liability is $30,000. However, she reported an amount of $20,000. So she maybe took a $10,000 deduction, right? Credit, something like that she shouldn't have. Her understatement is $10,000, which is more than 10% of her actual tax liability. The lease's penalty for substantial understatement of tax is 20% of the understatement, which is $2,000. Two more here. Penalty for a substantial valuation misstatement. We saw that earlier. Paul understated his tax liability by $8,000 due to a substantial valuation misstatement. So he misvalued his home, maybe sales tax on a car, any asset gets valued, and then you pay tax based on that asset. That would be something you could mess up there. His penalty is 20% of the understatement, which is $1,600. Lastly here, fraud penalties. Emily willfully and deliberately attempted to evade taxes, but obviously wasn't good enough. She got caught, resulting in an understatement of her tax liability by $50,000. The IRS can impose a civil fraud penalty of up to 75% of the understatement, which is $37,500. And unfortunately, Emily may also face criminal charges for the tax fraud. Fraud never pays, crime never pays. Don't you do it. Here's a nice little chart, something to memorize. Just going to leave this here for a second, but if you want to screenshot it, save it. This is something that we've gone over. It's just in a nice, concise little chart here, some of our penalties. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.